Hey, how's it going? So I just want to talk about installing profit first systems in your business. So if you are a high ticket founder and you have decent margins, and let's say that you're closing $10,000 sales, every couple of weeks, or maybe you're closing course sales for like 2 grand, right? You're selling a SaaS for $1,000 a month. Um, any of those products, what tends to happen is that you start out with really high profit margins, and then the profit margins dip, and you kind of don't. You're kind of like looking around, like what just happened, like where did all the money go? And it comes time to hire or pay your team or pay your high tech stack cost, and you're pulling from your profit account or you're pulling from your tax account to do it, and you're just eating away and eroding your profit, which is kind of the whole purpose of building a company, is to generate cash flow that's free and that's away from all your operating expenses. Okay, so I'm just gonna explain this profit first installation. I have been doing this myself this year, and it's been game changing, but I've also been advising my clients to do it as best they can. This works no matter how big your company is. If you have 100 employees, it works. If you have 1,000, it works in your department. If you are a solo entrepreneur, it works. Okay, so you need to be able to systematize your entire process of marketing for profit. So once your sales letter, your ad is doing most of the work, which if you don't know what that is, go watch some of my other videos. You'll find a breakdown of it. But eventually, you want your sales team pumping. You want your advertising pumping. You just want to be collecting payments, whether it's high ticket sales or whether you're selling a little bit more low ticket. Point is, you're doing well. There's a lot of money coming in. But here is the tough part: the money comes in, and um, the usual arrangement that you would go through is revenue minus expenses equals your profit. Okay, so what's the problem with that? Well, your expenses can be whatever you want, right? There's always going to be more expenses. You can always sign up for another $300 software that comes out every month, and you can do that 5 times, and then you've got thousands of dollars coming out every month. You can always, always, always find another team member to make your life easier. But then you'll be hiring 10 team members, and then one day you'll kind of look around, you'll be like, I don't know if anyone's actually doing anything here. Like, I don't know if people are being productive, right? And they might be tracking their time, they might be getting you the bare minimum, but they're not superstars, and they're not people that are crushing it. Okay, so if this is happening to you, we have gone through kind of a little reset with uh, the pandemic and the economy and all that good stuff. So you're going to have to kind of lean out your business. All right. And the lean companies usually win. Big companies are doing this right now, but on a smaller scale, like us, we can take that as a sign that we need to lean out the company. Okay. So I recommend going through this book called Profit First. It's really useful. You don't have to follow the accounting structure in it if you don't want to, but basically, what Mike explains in this book is that you can flip the accounting or the traditional accounting structure from revenue minus expenses equals profit, and you can just flip it to revenue minus profit equals expenses. Okay, so it's kind of weird, and you think about it, and you're like, how would that work? Like, I have $10,000 a month in overhead. How the hell would that work? Or I have $50,000 a month in overhead. There's no way, right? But the truth is that by doing this over time, and you don't have to do it all at once, right? Because it might be impossible at first. But if you just start small and you say, okay, I just collected $10,000 cash from a client. What I'm going to do is put, usually I would dump 8,000 of it into my operating expenses, right? Because I got to pay a team and I got to pay people to fulfill. But instead, what if one day you just say, okay, here's the service or the product that we're providing. What if I take 5 grand of that $10,000 and I put it into a profit account that I can't touch? I automatically just put 50% of it over into a completely untouchable savings account in a different bank account. All of a sudden, you can't touch it. All right. And in your head, it kind of is like, holy crap, like this just disappeared from my bank account. I have to figure out how to fulfill on the service that I provided or that I provide with just $5,000 or like 50% operating expenses, right? Whereas you're used to doing 80%. Well, what happens is you're going to be forced to figure it out and you're going to be forced to deliver a result. So that might mean that you have to move some team members around. It might mean that you have to maybe let someone go. It might mean that you have to um, engage in new technology. Maybe you have to go use some automation and some AI to be able to fulfill the service, right? This basically forces you to become a lean company, and then you can keep dipping in, and you, instead of cutting into your profit, you start cutting into your operating expenses. Okay, so you start at 50% maybe, or you start at a little bit more than you're comfortable with putting profit away, and then you keep pushing it. So let's go back to that $10,000 example, and you say you have um, you have a $10,000 deal come in, and instead of putting 80% towards fulfillment, you put 50, all right, and it felt uncomfortable, but then you're like, oh, we actually got this done. And now you go and you put 80% to the profit account. So now you only have 20% to fulfill, and you're going to have to engage all this new technology, and you're going to become innovative, and then you'll be able to fulfill. Not only are you collecting way more profit, but you're becoming more useful because you're leaning out your company, you're engaging automation, you're engaging artificial intelligence, you're engaging technology, you're engaging software, rather than dumping money into a bunch of inefficient employees or dumping money into a bunch of inefficient processes. This is not to say that you should fire all of your team. Quite the opposite, right? It's just that you should find who is the most useful and go all in on them. All right. And then with the profit thing, you just pull profit out first. And if you basically go with that fundamental methodology, you're going to have a lot more cash in the bank. Your free cash flow is going to be way higher. And then if you ever wanted to sell your business, your multiple is going to be quadruple what it ever would have been, because your profit margins are way higher, your business is healthier, and as a result, you're going to become more innovative and probably make more sales, scale up the company. Okay, so I hope that helps. It was very, very simple. I recommend just reading this book, and then let me know on LinkedIn, YouTube, wherever you're watching this. Just let me know if this is going to work for you or if this was helpful, and then try to just take 10% or 5% and just put it into the profit account. Take some money, put it into your profit account right now before you pay anyone this month, and then see how that feels, and then kind of keep going and push yourself a little bit further every week. So hope that helps. Talk to you soon.